Absolutely one of the worst liquidations that we've seen in crypto's history, much worse than what we saw in FTX, with liquidations above $2.24 billion. A lot of those, of course, coming from the long side over here, as you can see, and that's pretty much 2 days in a row. In actual fact, there's actually been more liquidations now than what we saw back in March 2020 during the COVID time period, during the lockdowns, which is absolutely unbelievable for the crypto markets, and the majority of that, of course, coming from altcoins and the altcoin sector. A lot of market participants over leveraged, and now the question remains: is the crypto bull run still intact, or is it over? Is this the beginning of the end? Should you be looking to short sell the next pump, right? That is the question that I'm sure many of you have. And in today's show, we'll try and address that. Make sure you smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Also, make sure that you're following me on X. The links are in the description below. If you go through down to the bottom over here on Twitter, make sure you're following me over there because I will, of course, also update you day to day, giving you live feedback on what's happening within the market. So we spoke about it last week. Something very significant was the daily exchange volume. And this has really been a dire situation for the bulls to attempt to hold up over this give or take 2-week period that we've outlined, especially before the next major economic data comes out, which is going to be coming out this week, Friday. It was like bulls skating on thin ice. And we said, if you continue to see the daily exchange volume moving towards the downside, well, that's like taking the wind out of the sails. And consequently, it means the market can be very easily manipulated, which is exactly what we've seen happening recently. Very well accurately described by 𝗕𝗬𝗕𝗬 on X as well, how Binance and Winter Minute have basically been sending funds back and forth to manipulate prices down and scoop up coins on the cheap. So the question is this part of a broader plan, or is this really the beginning of the end of the crypto cycle? Well, we'll want to see that the volume gets defended over here at about the $75 billion mark, and we need to see this very quickly move towards the upside. And we're going to go through another absolute brutal week over here. It's going to be very important for bulls to look to defend some key levels. I'm going to show you what the levels look like. We'll also have a look at the altcoins, and then we'll talk about the probabilities of where this altcoin cycle will be going, as well as if the bull market is still intact, right? So you can actually vote in the poll. There is a poll which is currently running over here. Did the crypto bull run just end? Please go through, click on the poll in the comment section over there. Make sure that you do vote. Let's see where the masses mindset's at, because at least according to the Fear and Greed Index, we actually only back down into neutral. And I'm sure that many of you will disagree with that you are in extreme fear, right? So let's have a look at the odds of the prior cycles and what we typically see over this Q1 period, which has historically been a really good time for the crypto cycle. Q1 has been one of the best performing times, especially when you isolate to what happened in the post-halving year, which would be like looking back at 2017, looking back at 2021. So 2017, you had over here a 11% rally, 2021, 103% rally. And now, of course, we're in 2025. When you go a little bit more granular and you look at the February time period, well, you can see February is historically one of the best months for Bitcoin, having only put in 2 red Februaries before. And what's important to understand about these red Februaries as well is that at least 2014 was not a post-halving year, which means if you consider the data for Februaries in a post-halving year, there was only 1 February that was red, which was 2020. And as you can see, we have a very similar drawdown right now. So it's not all over yet. It's a long month that's still ahead of us. We're only on the 3rd week of February, the first Monday of the new month. And the question is, can bulls reclaim the price action and send it back up, right? Because looking pretty bleak. If you look over here at Banter Bubbles, everything is down. If you look at the hourly, there are a couple of dead cat bounces currently happening, and will selling continue? That's going to depend on the open of the US markets. So when in doubt, zoom out. That is the name of the game. When in doubt, zoom out over there. We still have this massive fair value gap. Usually what you'd want to see is a little bit of a deeper correction into that fair value gap on a monthly scale, something like that, down to around the $80,000 territory. And that would actually look like a very good reset. Now, we've given the bulls the benefit of the doubt when we marked out the fair value gap over here and suggested that last month when we put in the low for January at 102,411, that was possibly enough, right? Then we marked out the trading range over here, where price is capped between $108,000 and on the low end, $91,271. We're still in that trading range. Nothing has changed with regards to this. The only thing that's changed is that the altcoins have been heavily wrecked, coming down into some key levels, some of them losing major levels of support and breaking structure completely. But when it comes to the Bitcoin price action, nothing has changed over here, right? We actually wicked exactly down to the same level that we saw back in December around those lows, which means that you're still defending and holding that key range, right? So that is your monthly time frame. We also highlighted over here on the weekly time frame the high significance of this important area at 89,900, which had triple confluence, right? First level of confluence is your strong horizontal support. Remember, horizontals are always much more significant than diagonals when it comes to finding support levels. And then next on top of that, we had a high time frame moving average, which is the 21 EMA, the yellow one, which also lines up at a very, very similar area. The bad news is this is starting to flatten out, which means if bears do continue to take control and break price below, and this does put in a dead cat bounce, and that EMA starts to roll over, that would be incredibly scary. At that point, yes, you have to start to say that the cycle is at major jeopardy and you may start to see things run down, right? The third level of confluence that we have is the little asterisk signs over here, which unfortunately are also flattening out, but nevertheless, we're still holding that as support, which means your stop and reversal indicator has not yet broken. What this simply means on the high time frames is that this is a very, very major level for the bulls to defend. This is a do or die situation. Bulls must hold this level over here to keep the bullish hopes alive. If we do start to lose those levels, we have to look down towards lower levels, at which point, yes, you do also have some major support coming down into the high 70s, low 80s, and really things start to absolutely fall apart if you begin to break down this level over here, which is going to be around that $69,000 level, right? That is pretty much where you can put the nail in the coffin and say probably the bull market is over, right? That we haven't seen that yet. Of course, we haven't seen that yet. For now, Bitcoin is still range bound. On the high time frame 5-day chart over here, you can see you also have your purple moving average, which is coming in at support at $85,000. This is one of our previous major targets that we had outlined where that had been front run. So there will be bounce levels along the way. And you can see on the daily structure, everything has been range bound. The entirety of last week, we're speaking about the question mark that was, is this the beginning of a new trend or is this most likely a range? And we spoke about, well, markets tend to range for about 70 to 80% of the time, meaning they bounce between a low and a high, a low and a high, and they remain range bound. And about 20 to 30% of the time, you'll see the market in a trend with high highs and high lows expanding towards the upside. And the question was this going to be the start of a trend? Because we essentially did break structure in terms of that lower high over there. We put in our first higher high, which failed at the range high though. And then we're hunting for potential higher low coming in at this area. And we spoke about how we need to see this hold and defend, of course, above the point of control, which was at $98,300. You can see the white line running across the screen over there. And that was your high volume area where you wanted to see support found. Of course, bulls failed at that level, bears to control. There is always some sort of a fundamental reason. This time, of course, it's the Trump tariffs, right? Trump tariffs coming out over the course of the weekend, freaking out the market. Crypto markets trade 24/7. So ultimately, they tried to de-risk ahead of the US market open, which is coming on later today. So what do we have now? What is the situation? Well, we're still range bound, right? We're still range bound. And in fact, we've actually finally come back to fill this inefficiency, right? You have the 50% of that wick that occurred on the 13th of January, and you wicked pretty much exactly into that zone, and you're seeing price react off of that. So what we want to be looking for right now, at least from the bullish perspective, is we want to see this range defended, right? You want to see this low defended. You don't want any closing candles occurring underneath 91,800 and or 91,787. If you start to close candles underneath there, then unfortunately you are going lower. First bounce level will be $85,000, and then you'll need to reevaluate. If that bounce leads into a lower high and underside rejection, expect absolute carnage, and you're probably going much, much, much lower. Now, the good news is since we found the fear and greed index to be relatively unreliable, right, what we've been looking at as well is what happens over here on the funding, which is a much more objective measure of what price action may be doing. Now, what you want to typically be doing is buying support and selling resistance. And if this is the range low support that price is coming into for Bitcoin, and we have fear coming into the market, which is actually where you should start to step up in terms of buying, well, that shows additional confidence that this level should, at the very, very least, lead into a short-term bounce. We do have negative funding. You can see over here, the last time that we hit that range low level, we also had negative funding over there, and that did lead into a price bounce, right? So negative funding, it could get worse. Yes, it could drop a little bit lower over there, but generally speaking, you want to see this range low level on the daily chart hold, right? You can see over here as well, the deltas are negative across the board with Bitcoin, ETH, Solana, you have over here Pepe, you have WIF in the middle, and then on the bottom right, you have near also extreme negative funding over there. And then also just quickly going back to this over here, and we can scroll to the top, you can see on the 24-hour long to short ratio on the top of the screen over here, you have 48% running longs and 51.88% running shorts. This is typically the environment where people start to bail out of their positions right at the key major support. Altcoins are a different story. I'm talking specifically about Bitcoin right here. So Bitcoin, theoretically, right at major key support, giving you all the signs and the symptoms of a strong buy zone over here. If you do start to lose that, yes, the picture does begin to change. But theoretically, this is a strong buy zone despite what the sentiment may suggest, right? You can see over here the fear and greed index only down at 44, whereas this is giving us obvious extreme fear within the market, right? This is telling us the market is extremely fearful, especially when you coincide that with what the 24-hour long to short ratio is, people flipping into shorts over here, getting greedy for the downside price move, right? So what are the probable outcomes over here? I outlined this specifically to the Whale Room Discord, as well as giving them an update of where I think we are. If you do want that information, there's a link below that will take you through to that Whale Room Discord. But essentially, part of what I discussed with them, I'll give you a tidbit of what we spoke about earlier on this morning, is the highest probability, the second highest probability, and then the lowest probability outcome. The highest probability outcome is that you follow the white trajectory over here, which means simply that price will probably continue to range between these two levels, which has been the overall trading range. That will allow time for the moving averages, the 200 MA and 200 EMA, to catch up to this level, adding additional support, right? Now, if you do lose that level, well, then your next highest probability would be to follow the yellow line over here, at which point I would expect major support to be found at that 200 MA and EMA, and then it would probably lead into a bounce, a major shakeout, more capitulations within the market, proper altcoin capitulation, bigger liquidations, and flush out the entire retail market, at which point the correction may occur over the course of the entirety of February and March. And then you'll probably reaccumulate, reclaim the trading range, and run up to finish the cycle later on in the third quarter of this year, right? So that's the next probability. I give this outcome, the white line, the highest probability. This is a close second over here. And the lowest probability would be the orange trajectory, at which point, if you do break the red line down over here, that's where you can pack it up and say the bull market is over, right? So we still have a little bit of time for everything to unfold. Now, again, just take the charts at face value. The charts at face value should suggest that things are not that bad. And when you look at the return on investment of this cycle compared to the 2017 cycle, which you're following most similar to, we've had a very slight deviation. But the sentiment would suggest otherwise, because people are very heavily invested into altcoins, and worse off, they're taking those altcoin trades with leverage. So, for example, 3 to 5 to 10x leverage long positions on the altcoin sector. And that is the reason why people are so fearful right now, and the sentiment has been shot. But taking Bitcoin at face value, it looks fine. It's range bound, it's chopping about, and it's really as simple as that, right? There is a big question mark what will happen with the US markets later on today, which we'll also talk about in just a moment's time. So is the bull market intact? Well, we need more information still, but as it currently stands, absolutely, for Bitcoin, the bull market is 100% intact, and absolutely nothing has changed. And as I spoke about in the Discord over here, if you want more of that information, I've outlined exactly what we're looking for and where I believe we currently are, right? Now, remember, the bull markets tend to top on extreme greed. And the reality is that we have not yet seen that type of extreme greed within this crypto cycle. We've had brief moments of greed creeping in, but we haven't had prolonged periods of irrational exuberance, which you typically see from bulls, especially so within the altcoin market. And you can actually look at the historical data over the course of 1 year, and the orange and yellows over here represent those small periods of where you have that greed. Now, what's more notable over here is the current negative funding that we're seeing within the market, which lines up with what I was showcasing over here. When you see the average predictive funding rate going negative into key support, that becomes a very strong buy signal. This is independent to Bitcoin's example, right? What I'm showing you is independent to Bitcoin because I'm looking at Bitcoin's funding. You would need to go and look at each additional trade or chart that you're looking at. So for example, if you're looking for a long on Solana, you need to go to Solana's chart, find the major support levels for Solana on the Solana USD pair, and then you need to come and look at what the funding is doing, right? So each coin will be slightly different, but in the general perspective over here, we've very, very rarely within this cycle seen this kind of negative funding, where you're printing this dark blues over here, which is negative 50% APR, right? Basically, people are very pessimistic on the market. And that's actually usually where you start to find a major turning point, especially when you line that up with what's happening on the liquidation levels. Each of the major liquidation levels did lead to a turning point in the market, either a major high or a major low, right? So if it's a big short liquidation, that could lead to a major high. Big ETF inflows, you can pair that up with this. Same thing is true for massive ETF outflows with big long liquidations whilst coming into key support and putting in that negative funding, right? So those are some of the things that we're looking at over here. So true altcoin capitulation over here, getting absolutely smashed. Bitcoin dominance rising towards the upside. This is an additional confluent factor that we can utilize in determining, is the bull run over, right? Bull runs tend to top with Bitcoin dominance bottoming because that is where greed is at its height, because people are looking for the highest returning assets, and therefore they get that, or the highest returning speculations, which they're going to go into the altcoin sector for. And Bitcoin dominance rising shows a lack of interest in those sectors, right? So with that being said, this has been super choppy. Yes, we had a rising wedge formation over here, but we always said that horizontals are much more significant than diagonals. And you broke this down, you spiked back up, and now you've had a huge spike. But you have actually met the pivot level, which has rejected Bitcoin dominance on numerous other occasions, leading actually into a massive drop following that. So the question is, will we still get the same thing over here? Well, there's two key levels that I'm looking at right now. Who knows? Maybe that's it, right? Maybe that's the end of it. But if we do take another big leg up over here on the Bitcoin dominance, one thing I will be eyeing out is from the top over here down to the cycle low. I've essentially measured out the fib level of that, and you have your 0.786 level coming in at 66.27%, right? So that will be a very, very, very significant level. I always ruled this in as a worst case scenario for the altcoins, and you've essentially played out that worst case scenario right now. So keep that in the back of your mind's eye, food for thought. Usually you see the altcoin sector bottoming when Bitcoin dominance is topping. You see the overall crypto cycle topping when Bitcoin dominance is bottoming, like over here, right? So we're not yet at that phase. We're not yet at that phase, which reinforces the likelihood that this is probably going to be a drawn out cycle, a right translated cycle. It's playing out just like we saw in 2017. And this is what we would have left, right? I'm not necessarily saying that you're going to have an as aggressive upside move as what you saw in 2017. But generally speaking, we're still following that trajectory. And even if you look at 2021, well, you can see that cycle still also ended after 1,059 days into the cycle. This cycle currently has been 817 days, which would make it one of the shorter cycles. Now, if we did have such a short cycle, then you can look to cycle 2 and cycle 1. Those cycles were very aggressive towards the upside. So again, siding with the probabilities would suggest that, it's a drawn out long cycle and everything is still playing out, right? Playing out just like it was previously expected. So you have the inverse happening on at least ETH-BTC as what you saw on the Bitcoin dominance. Bitcoin dominance was breaking, of course, the rising wedge formation to only break back inside and run the other end of the trade over there, smashing a lot of people out. And you see the same thing over here, right? ETH-BTC continuing to capitulate towards the downside. This is brutal. Now, what we've said with ETH-BTC is, despite we recognizing that it's probably nearing the end of its death over here, and there should be some sort of resurrection, it's not worth jumping in until such time as you get confirmation. And we said the confirmation would occur over here if you break structure, getting above 0.037. We can now move that level down, right, to give us an earlier entry. So the level now that I'd be looking at, given the recent price action, is out probably, and this is still pretty aggressive. If you want the conservative reversal, you'd still be looking for a break above 0.037. But if you want the aggressive entry, I'd be looking at that at 0.0326, right? Which means pretty much you can move this down and you'd be looking for something like that, right? That would become your earliest signs of a reversal. Now, the whole market is waiting still for the Fed to do something, right? When things break, the Fed sometimes does something. We'll see if this time is any different. And what you want them to do is, of course, pivot into quantitative easing, which we've seen there is some form of it in terms of they are printing money for various different programs. So there is a light version of it, but we want to see a full-on pivot. That should break this towards the upside. And the only time that we're going to get that is probably in March. So prep yourself, right? You have about another month of potential pain to survive and go through. If we look at the stock market over here, the stock market continues to chop about. Here's your levels to watch. Really unclear picture over here of what will happen today. Only time will tell. We'll see what happens with the stock market in terms of the tariffs, but following a break of structure, it's simply just chopping about on the S&P 500. Here you have Coinbase as well, which is also sometimes a good indicator to look at in terms of what the rest of the altcoin sector may be doing. And if we focus on these levels, I'll make it nice and thick, and let's just quickly change this onto a straight line over there. This is a high time frame cup and handle that you've broken out. You're still closing multiple candles above here, and on Coinbase, the measured move would take you to 550. So this theoretically is still intact. Again, if you start to break down below this candle that occurred in November, that's where massive trouble starts to come back into the market. And at that point, you can maybe say this was the worst cycle ever, the shortest cycle ever, the least gains ever, and it's over, right? We're not at that point yet. We also had a big spike up over here in the USDT dominance. And this is probably the most concerning chart in crypto right now. We do, of course, want to see this break back down, hopefully showcasing a massive bull trap. I spoke with the Wales School members on the previous sessions, saying that we're putting in a descending triangle, but I actually have the expectation that you'll put in one more fake out, right? One more fake out, shaking people out to then break back into the triangle and then ultimately break down. Now, I definitely didn't think that the fake out would be this large, right? This is getting a little bit uncomfortable to me in terms of the fake breakout that I was looking for to only slam back down, which means that time is of the essence. This needs to start to break back down underneath these clear resistance levels at 4.34 in order to get back down. Now, if this does start to hold up and consolidate above this resistance level, flipping it into support at 4.33%, then that's where it's time to start to panic, right? At that point, you have deviated this level, you're flipping it back into support. And if this starts to run up over here, we're in for much more pain. And what we can highlight over here is, remember, this is actually this yellow line over here has marked every major top within the market. Not necessarily always a cycle top, but a major top, which could lead to a much longer term correction. So if it wasn't a cycle top, but a major top, you could see something like this, where this does end up holding and running all the way back towards these highs over here. That would be pretty brutal, right? That would be multi-month corrections in the crypto market. And then you'd have to wait for a deeper breakdown later. So a lot of moving parts, a lot of things going on. You need to trade your portfolio. You need to trade your capital and manage that, right? You need to manage that. So you don't need to always look at all of these things. You simply just need to look at, is your equity curve for your own personal portfolio putting in higher highs and higher lows? And if not, you may need to make the tough decision at some point of cutting some of those positions, right? To stop the bleed. What we can see as well, if you measure the others chart, others is the coin market cap or CoinGecko list, minusing all the top 10 coins, which are the majors within the market. So it looks at the reflexivity, if you will, of the altcoin sector. Now, I've measured that specifically against Bitcoin. And if you look at others against Bitcoin, it has actually eventually come perfectly back into this. And this is where every single other altcoin season occurred, just by the way. So when you pair these next to each other, specifically Bitcoin dominance, and you pair the altcoin, the others BTC chart next to that, it does paint an interesting picture in that these are where the major altcoin rallies occurred, right? So you had that over there. And if you go over here, that was essentially this period where this started to run up, right? That was this drop. Then you had this one over here, this drop that occurred over here in, of course, 2020. And this was where this met the bottom of the trend line and it started to run it towards the top side, right? And now you're hitting that level for the same time, at the same time, right? So pretty significant. Again, you can wait for confirmations. You don't necessarily need to try and be a hero, right? You can just wait for the reversal, but it's good food for thought, right? Good food for thought. We've hit this key zone over here on the, at least on the Bitcoin dominance chart, back into the yellow line that's down sloping over there. Could we soon be seeing a Bitcoin dominance top? Well, if you are seeing a Bitcoin dominance top over here and this simultaneously holds just like before, well, somehow, some way, the Fed may make some sort of announcement and at least save the markets, right? But it's not a healthy place to be in if you are a trader or an investor and you're living on hopes and prayers, right? Remember the saying that hope is not a strategy, right? Hope is not a strategy. What's important is to understand where your portfolio is at, how much you have allocated into each particular coin so that you can, of course, manage the risk. The best way to do that, in my opinion, is through CoinStats, right? I use CoinStats and they do have an 80% special for those of you interested. There's a link in the description below. This will allow you to see how up or down you are on the overall portfolio and then make those relevant decisions, right? So again, there's a lot of charts, a lot of moving parts. What's important is to know with your own portfolio exactly what's going on, right? We can see still in terms of from at least in this cycle, let's actually have a look over here. Let's go to 2023 from the bottom. And we can see the top performers still remain Solana, right? Solana is still the top performer. But if you look at Solana over here, I mean, it has dropped pretty significantly from those highs. That is from the highs down to the low. That is 40%. That is pretty brutal, right? So you want to see this trend line continue to hold in terms of putting in those high lows. Very important over there. I always recommend when you see these dumps, look to the coins that are bouncing out first. That will show you relative strength. And if you are somebody that does believe that the cycle is actually going to continue and we're still in a bull run, the market is already giving you very valuable information in terms of showing you what are the best performers going to be. The best performers are usually going to be the coins that bounce out first and hold relative strength turning green. Now, one that you can look at over here is HYPE, right? HYPE is still holding up, right? We looked at the big move up. We wanted to see closing candles above $25. We got exactly that, but only 2 candles. We didn't get 3 candle confirmations. You got 1 candle, second candle open and closed underneath there, third candle nuked. Nevertheless, HYPE came down into the range low over there and has consequently put in a pretty sizable bounce at 5% right now. That is a sign of strength. If you look at something like Ethereum, well, Ethereum has been hammered, right? We're looking at the possibility of a inverse head and shoulders. Of course, that has pretty much failed over here, but you do still have price respecting the overall trading range, right? Here's your trading range, perfectly down into the range low support over there at 2,142. If ETH is trying to bounce, but it hasn't held up as well as Solana, right? ETH down 10%, Solana down 3% on the day, and then you have HYPE up 5%. This is a good sign, right? This is showing you that HYPE is probably going to be a top contender in the next leg up. Okay, I'll scroll through the list over here. Mantra, very strong, right? Mantra is probably the best real world asset play that's out there. We got our initial entries down here, right? Between 15 and 60 cents. First buy, second buy, up over a 10x on this trade, right? Huge. Mantra is here to stay. This is probably going to be a leader as well in the next leg up. Let's scroll through the list. What else do we have? Anything else that's stand out, right? That's standing out over here and holding up some gains, right? I'm not going to be looking to super low caps. I'm more looking for some of the majors, right? And how those majors are doing. Okay, so yeah, those are some of the top ones over there. HYPE, Mantra, keep those on your watch list. If you are looking for opportunities and you're moving from weakness into strength, well, that's your definition of strength, right? Those are the coins that are strong. Now you've seen a major reset. There has been a reset on a lot of the coins. Some of the levels that I never thought would hit have actually hit, right? We can go through to one of them was TON. I definitely didn't expect TON to come all the way back down here, but it hit the level, right? There it is. that was the zone. I think I said this way back when I had this major run up over here. And I said, if I was going to be a buyer of TON, I would simply wait for $280 to $320. You can see you got exactly into that zone over there. This came down to a low of $2.99. So breaching that $3 mark over there. And basically, this is going to be your invalidations for the majority of the coins, right? Majority of the coins, you don't want to see them come back down below the lows. What typically happens in this environment following a big sell-off is you can mark out a trading range. So this is going to be good for any of you that are short-term traders. This is probably an important lesson for you. So what I would be doing is this, right? I'd be looking at the breakdown level and I'd be putting in, there you go, basically like that. We'll change the color over there. That is basically going to be your range high, right? This is going to be your range low over there. Expect that price is going to chop about between these two levels. And once we close this daily candle over here, you're going to have a big wick. Wherever this closes, let's assume it closes right over here. Eventually, you're going to come back down and possibly fill some of that wick. And for next couple of days to weeks, expect that a lot of these altcoins are going to chop about within this trading range, which means you're going to see wild swings in your portfolio. So for the short-term traders, this can be a good way for you to start to, really get some amazing trades in and milk the market, right? You're looking to trade from the range lows to the range highs. If you do want to learn more about that, again, remember, jump into Whale Room, into the Discord over here, because this is where we cover these things, right? If you go to Farouk specifically, he'll be trading the ranges over there, right? There it is. You can see he's got the Bitcoin range already lined up over there. You have over here on Solana, you got your Solana range, right? So looking down to 200, move back up to 260, and then we'll see from there, right? So if you do want to trade that, jump into Whale Room in the Discord over there. Let's continue. What else have we got? Okay, let me know in the comments if there is anything that you'd like to see, anything that you want me to have a look at. Look, it's going to take time. The market needs to digest the current moves. Maybe what we'll do is let's just have a look over here at where we're at with the total cryptocurrency market cap. There it is, right? A proper flush, but theoretically still maintaining that cup and handle. Now, I will remind you, if you look back to some of the other cycles, like 2017, like 2021, these are the type of wild swings that you could see, right? Everything looks good, everything's moving up and then slammed, right? Everything's moving well. Next week, slam down, and then you get these full vertical sends. We haven't seen any of that yet, right? We haven't seen the full vertical sends yet in this particular cycle. You saw the same thing back in 2021. I would like to make the argument that we're probably somewhere around here or somewhere around here, which means you're still looking at continued upside over here on the total cryptocurrency market cap. And if the total cryptocurrency market cap continues to move up, then the cycle hopes are still alive. And you actually have a measured move from the low of the cup and handle over here. You can measure to the neckline, and you can actually take a look from the breakout level over there. This has a conservative target of just under $5 trillion, right? Just under $5 trillion, which would mean from current levels over here, a 58% move for the total cryptocurrency market cap in terms of new money flowing in, right? So that's still looking okay. There is still some hopium over there. You've broken back down over here. Let's just clean this up a little bit. We're looking at this yesterday, closing back above the neckline, right? Pretty important, closing back above the neckline of the cup and handle over here. That would be a good sign. That would be a strong sign. So give it a bit of time, right? Give it a bit of time over here. As long as you're not over leveraged and you're holding spot, you should still be okay. All right, so track your portfolio, keep safe out there, jump into Whale Room if you do want to get the full updates of everything that we're looking at over there. That's it from me, folks. I'll see you all on the next one. I hope you have an absolutely stellar day and stay safe out there. Cheers for now.